And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's bright, it's beautiful. It is Wednesday morning. It is hump day. And yes, if you were short the market, you're getting, you might be getting squeezed at the moment. As we did say, likely to bounce into the CPI report. And then how do you interpret it? Well, it's the expectation versus the reality. And yes, inflation came in lower than expected at 4.9%, lower than the 5.5%. Core inflation came out as expected at 5.5%. And we did say, hey, look, a higher than expected inflation print would be bullish for the dollar, and a lower than expected inflation print bearish for the dollar. And what do you know? What happened to the dollar this morning? And as the dollar goes down, risk assets typically go up. We did say, hey, look, as long as this yellow 21 is governing, then, well, pressure is onto the downside for the dollar. However, I'd like to offer up a bit of a different interpretation today. As well, it brings us back to the great old saying, you know, when inflation is going higher, then the dollar should go down. Not what we've seen. The peak in inflation back in, I think it was July last year. Since July last year, and this is September, inflation's been coming down, and the dollar's been going down alongside with it. You would think the opposite, right? Well, maybe the fact that what the Fed is doing is potentially working, and inflation is slowly, I think for the last 10 months, it's come down. 10 months, yeah, that would be since pretty much July of last year. The dollar's been essentially coming down, but what if all of a sudden it turns around here and all of a sudden we view this, you know, it gets interpreted, oh, what the Fed is doing is working, so the dollar can be strong again. There's that thought there, okay? Thought number two is, well, since inflation is coming down, now we can print more money again. We can start cutting rates. And I wanted to bring you attention to this tweet over here from TED Talks Macro, or Macro Micro, retweeted here. And they said, after US CPI print headline 4.9%, core 5.5%, both slightly below consensus, the possibility of another rate hike during the June FOMC is less than 10%. So next FOMC meeting coming up in June, next month, the market is pricing in a 90% chance of a rate cut by the end of the year. So remember, 4.9% is quite a bit away from the 2%. And the Kobisi letter had a nice little tweet as well, and expectations are shifting again after CPI showed inflation at 4.9%. Remember, they can adjust that number back up. Futures now see a 38% chance of a rate hike or rates cut beginning in July, much sooner than previously expected. Odds of an additional rate hike this year are down to 15%. Keep in mind, the Fed has stuck by their 2% inflation target. We are still well above 2% inflation, but inflation is down for 10 consecutive months. This will be interesting. And I would agree there. Tomorrow, we're going to have PPI numbers and jobless claims. And boy, I thought inflation was going to come out a little hotter than expected, but why would the Fed allow that, right? We call it the CPI report for a reason. Ahead of the debt ceiling debate, why would they say inflation's running hot? They want, you know, the debt ceiling to get raised, and that wouldn't look good if inflation was still hot ahead of the, the June 1st deadline date. Janet Yellen says we got to raise the debt ceiling by that time. And so, keeping an eye on this tomorrow, perhaps we do get some bullish news for the jobs market and the dollar. Again, I think it all, I'd be watching the volatility indicator on all these assets, including Dixie and Bitcoin, which volatility is specifically on the 2-day and the 3-day. the 3-day here. 3-day volatility is extremely low, and when we do get expansion defined as above 25%, you should see the next major move. And 25,000 definitely in the cards, 32,000 definitely in the cards. Still waiting for a break of the range here, and some people are calling this a head and shoulders. I'm calling it a bull flag or a flying pennant, or whatever you want to call it, something you'd pin on your t-shirt. Looks like a triangle to me, but inverted head and shoulders has a bit of a deeper target. And what are they talking about all over the interwebs? Double shoulder, head, double shoulder. And where is the implied target off of something like this? Head and shoulders target. Let's give the conservative target from there. Oh, what do you know? Right in line with the bottom side fib there, coming in at probably the 618 fib. Again, where do we get the green box of peace and prosperity and death and despair? Well, something like this. Wick to wick. Wick to wick, and I guess we could bring the top side of the box down slightly. I hate to keep adjusting my box in peace and prosperity and death and despair, but as you do see the purple 200 exponential, if we do take the downside route, typically you're going to bounce off of it on the first pass, and I'm going to get rid of my squiggly lines there. And as you can see right here, even on the hourly time frame, on the first pass off that purple 200, we are getting a rejection on the first pass. Did want to bring up here, the 4-hour will be closing. Let's take a look at the 2-hour actually, because it's about to close. And here's what I am, a bit, just playing the defensive, playing both sides here. What can happen? And I'm so glad today is one of the days I said, I'm not going to trade. I'm not going to trade because there's a lot of volatility, and I'd rather jump on the side of the market makers. And so are we getting sucked into a bit of a bull trap here? Is the dollar going to reverse by the day? So we talked about low volatility expansion. Well, again, the dollar, getting sold off, going into the rally, playing out a nice little bounce here on the hourly time frame. And now momentum is crossed to the downside. And do we have bearish divergence coming across the board there? Yes, we do. Several drives. No. So a bit, caught in the middle of the range. I mean, dollar really in the middle of the range, and resolution of this range on a higher term time frame, like a 12-hour, is likely going to get the next big move on the dollar, a break above or below. I'd even say, let's wait for the daily. Let's wait for the daily range to get broken to call it an upside move or a downside move. To be fair, momentum is to the downside, but we'll cross up here today above 101.59. And so it's not going to take much for the dollar to cross back up. And to me, it makes sense. If what Powell is doing, showing that inflation is coming down, well, the dollar should remain a stronger currency. However, let's not buck the trend yet. And to be fair, we also, to me, this is a confirmed, lower low right here, but we're getting a bit of a backfill. So again, a lot's at stake. Volatility expansion on the dollar, likely to get the next trending move for all the risk assets, stocks, and Bitcoin. NASDAQ is still grinding up against the top side of this range. S&P weaker bounce, and the Dow is still, above or below the range. The Rangeinator momentum will cross down on the day below 34,000. So at the moment, just a bit of a pity bounce for Bitcoin and for risk assets. And what am I talking about? A pity bounce using the Fibonacci retracement tool. pity bounces come up to the 382. And I am leaning more towards a bull trap right now. So all the way up to the 618 is in the cards. That's the 28.8 pivot. Really though, that's your first warning sign that, okay, we're going to break out to the upside, but we're still, got a massive trend line there, and we have not broken the range. So still stuck in the middle of the range, and currently, still the bears have control. And how do you invalidate a head and shoulders target? Well, you got to take out one of the shoulders. And the same thing we talked about on Ethereum. This had an inverted head and shoulders, almost a double head, double shoulder. Needless to say, a break of this shoulder right here at 1710, or you could front run it at 17, I think we said 50. But as long as we are holding it up off the green 55, as I said, hanging on by a booger. You ever had a cliffhanger, nobody told you? Well, that is pretty much what all the assets are doing at the moment. And tomorrow, the jobless claims, probably a better read, because everybody knows that they can revise these inflation numbers up or down or sideways, however they want after the, but the trend right now is the same trend, is inflation's coming down, PPI is coming down, jobless claims. I think they were a bit hotter last month. So we want to see jobless claims go up. Yeah, we want to see them go up. That would be essentially bears for the dollar, and really the dollar, we want to see the dollar break the range here at the bottom side of the tracks at, call it 101, daily closure back below 101, and risk on party. We know that Bitcoin's probably going to rally to the upside, but as for now, I'm going to bring our attention back to the 4-day. We talked about it yesterday. Multiple drives of bearish divergence come in. Oh, where is that coming from? So we did get a higher high there, but this is another lower high. Let's see. Could you use that pivot at 39,000? I think you could. But currently, yep, just getting kicked out of the bearish control zone, losing the exponential. This is a higher term time frame. Volatility expansion on this 4-day or even the 3-day. And to be fair, the 3-day will close in 2 days and 10 hours, and we'll cross up above 29,663. That'll look good. And what do you know? That's right near our pivot at 29.5. So what you'll see is a shift. The lower term time frames should bleed on into the higher term time frames. Right now, does look like we could be bouncing back up to the top side of this trend line, and then it is lower high or not, and we do have a couple of lower highs. This will produce a higher low, and if we do confirm that, you're going to have that bullish divergence coming back all the way from this pivot right here. 1, 2, 3 gets you a shot to the top side of the range. 3 drives to the top side of the range. First target 29.5, second target would be 30,400 off of the bullish divergence theory. Lastly, 4-hour time frame is coming into a bit of a death cross, and that's exactly what you want to see. Same thing, same setup on the 2-hour when you have low volatility coming into the green 55. Volatility expansion crossing the upside. First pass into the bullish control zone after being away from it is usually a sell. So if we are going to continue onwards and upwards, I would expect, short-term pullback and then rally back up towards the top side of the range. Always best not to chase the higher high, well, it's not a higher high yet, but it is a higher high than these highs. And the same thing on the 4-hour, we do have a bit of a trend line coming in. Let's see if we broke it here. On the 4-hour, yep, broken. So how do these usually work? Well, you break it, you come back, test the trend line, and then take off. All right, that's it out of me today, guys. A bit of an unchanged market, stuck in the range, sandpaper range, and we will update you tomorrow. And I hope you guys have a blessed and highly favored day and a great day of trading if you are trading out there. And we will see you tomorrow. Take care.